Welcome to folks who are coming on in. We will wait a couple of minutes in terms of ensuring that folks get started before we get our slides moving and jump into the meat today. If you have any questions right off the bat, feel free to drop them in the chat and we'll weave them through. Otherwise, would love for folks to drop in the chat where they are calling in from. This is mainly to make sure our chat is working ahead of our webinar, but would love to see where folks are currently based. All right, Austin, Cody, first up. Our chat is working, at least for Cody. Thank you. Cody, we were actually, the whole Numeric team was in Austin recently for an offsite, and we went to a famous barbecue spot where I had by far the best prime rib of my life. So you were lucky over there. Los Angeles, Philly, awesome. Getting some other folks in the chat. John, we hosted a LA dinner at one point and likely will be out there in the future. So we'll be sure to let you know when we're bringing controllers and accounting teams together there. Sausalito, Philip, very close by, where Ben and I are currently based. Most of our team on the Numeric side is either in SF or New York. So got folks on both coasts. Well, we are roughly 2 minutes in. I know we only have 45 minutes for this conversation. So we're going to go ahead and jump straight in to the deck and begin talking about one of our favorite topics over here at Numeric, how to leverage AI, how to think about when it makes sense, how to think about when it doesn't make sense, and particularly with the lens of thinking about the order to cash process. So with that, let me go ahead and screen share, and I'm going to lean on the chat once more and just make sure that, can I get a note that folks can see my screen? Perfect. All right, we do have confirmation. Sweet. So we're gathered here today to talk about order to cash automation in AI world, largely a continuation of a thread that we have spent talking about in quite a few different webinar settings around how should we think about where AI can have an impact, where it makes sense for teams, how should we navigate the really quickly changing landscape. As we get started, would love for folks to drop in the chat on a scale of 1 to 10, how happy you are currently with your order to cash process, and no judgment. If you are currently at a 1, that was our team fairly recently. So no worries, but would love to get a gauge of maybe who are the people that we can lean on in the 9 and 10 camp as we go throughout sharing tips and tricks. So as we get some initial responses rolling in, we'll have Ben Sheridan, who will be leading most of our webinar, introduce himself. Ben joined our Numeric team fairly recently, and I'll turn it over to you, Ben.
Awesome. Thank you so much, Tierney, for the introduction. My name is Ben. I'm a solutions and product manager here at Numeric. I did join a few months ago, and I came here from Snowflake, where I was the revenue accounting and operations manager. I worked really closely with our revenue automation projects, as well as with the general month-end close and some adjacent projects in new product introduction. Prior to Snowflake, I worked at KPMG as an auditor, specializing in venture-backed technology, pre-IPO, IPO, and first-year SOX audits. And I'm really excited to be here today to share some of my thoughts with you about the current state of automating your order-to-cash process and what some of those different approaches look like with and without AI, and maybe where some of the trade-offs live based on my experience.
Awesome. I will say from working with Ben, I think it is hard to go 30 minutes without at some point this topic not coming up. So lots of opinions here, which I'm excited to jump into. So our roadmap for today, we're first going to talk about just an overview overall of the order to cash process and some of the key junctures where it may make sense to think about automation. We're then going to move into a comparison of the legacy approach of how order to cash has historically been done with more rigid systems versus an AI approach, some of the challenges and benefits in both camps. We're finally going to wrap it up with what we recommend, sort of this non-binary approach. We're going to walk through some of the ways in which it may make sense to incorporate some newer tooling into your order to cash process, and then we'll wrap up with a Q&A. That being said, if you have questions throughout, feel free to drop those in the chat or in the Q&A. We'll be monitoring those. And we'll also follow up with this slide deck as well as the flow chart that we'll walk through as we sort of talk about architecting a strong order to cash process. So with that, to jump in, Ben, do you want to touch on why are we having this conversation now, and why did our team sort of determine this might be a good time to talk about order to cash?
Yeah. So what I can say is, in my experience, especially through audit and leading up to today, I noticed that there would be a huge delta between emerging companies, larger size startups and enterprises in terms of what degree of automation could be achieved. I would see a lot of Excel, even in the revenue space, living in spreadsheets, having a lot of high manual touch. And I think with a lot of the new technology on the market, that certainly doesn't have to be the case anymore. And people can achieve a degree of streamlined automations that don't have to be exclusive to large enterprises. Um, and that this can also now be done in a way that is contemplative of your evolving compliance requirements and kind of thoughtful towards what your auditors might be looking for as you scale and grow and do all the great things you want to do with your company. And so I think we're in a really interesting time and space where there are some phenomenal technologies that can really accelerate the process, and also some fairly long-standing existing technologies that can be layered in as well to kind of have that forward-thinking audit readiness approach.
Awesome. So to kick us off then, with that context, we're going to start by jumping in what optically initially seems like an overwhelming flowchart, but that Ben will break down for us in terms of how we think about some of the core components of the order to cash process. So let's start at the very beginning, and our focus here is just going to be a high-level overview of some of the core junctures that we'll talk about when we're comparing the legacy versus the AI approach. So Ben, maybe at that starting point on the order part of the order to cash process.
Absolutely. And a kind of funny analogy maybe to the broader theme of our conversation today. This was one of the first things I worked on when I joined to Numeric to kind of help map out what an order to cash process looks like. I did actually initiate it with AI, so I narratively wrote down a process, had Figma make a draft flowchart, and then myself kind of layered on, structured it to include more detail, maybe better aesthetics and some systems documentation. But kind of the general point being that many processes are going to be a mix, this flowchart included. Um, but anyways, the way I've structured this is I start at deal negotiation, work through order form generation and signature, ultimately then also where the data enters the CRM, where that data enters your billing system, and from there, how you create both your invoice and revenue accounting, how you match cash to those invoices when it's collected, and then ultimately how you manage contract modification, change, amendment, renewal at a very high level. And what we've layered on here, in addition to, for any auditors on the call, what'll look familiar as control mapping, are also our systems mapping and then some indications of where automation can jump in. So if we start at the very beginning, one thing I love to call out is when you're joining a company and looking at revenue operations, one of my favorite first questions to ask is, what is our bookings policy, if there is one? I think this is a great way if you are going, not to jump ahead, to look at something like a CPQ. Use of that software is going to be as strong as the policy that underlies it. And something like the Numeric AI assistant can actually be used to draft both kind of initial first pass at a bookings policy as well as at your technical accounting policy. Really helpful to build the outline and the framework, and for you as a company to start thinking about, how do we want to structure our deals? What sort of things do we want to require approval? How do we want to configure our data elements in our CRM so that we can downstream automate our billing and rev rec? Um, so speaking of CPQ, when you get to document generation, this is a long-standing technology that I'm a really big fan of. There are some cool new companies out there that are making it a little bit more affordable and accessible. A lot of my experience with it was in Salesforce, but this is like one great way, not necessarily AI powered, which can take your quote data, generate the order form for you, push that quote data into the closed won opportunity so that you have near perfect parity between your underlying quote data, your CRM data, the data that integrates into your billing system, and the contract itself. Of course, worth calling out, if people are adding terms to the contract after initial generation, which might be in conflict with the quote level data, these are the sorts of things that people would want to really be careful to review for in a built out order management process. Because obviously, if you say annual billing, and that reads in your billing subscription as evenly each year. But in fact, there's a table at the bottom of the contract that says, 100,000 year one, 200,000 year two, 300,000 year three. You'll want to make sure you have a mechanism to update your billing schedule. That said, there is also an interesting AI layer on the deal review part. Thinking of something like DocuSign Insights, for example, which can read your contract and help call out non-standard terms or even potentially a PO mismatch between the contract that you signed and a PO that later came in from the customer. Um, if we keep scrolling to the right and down a little bit, um, in this example flowchart, I wanted to create some manual steps so that I could show where AI and automation can help. One of those steps is creating your billing schedule. Sometimes companies are in a position where this is done manually in the billing system or payment processor. Having an integration between your CRM, CPQ setup, and your billing system can certainly automate a high degree of that and put you in a better position to more review your billing subscriptions versus having to manually create them. From there, you might want to have an integration with a sales tax platform supported on the billing system so that you can automatically apply sales tax rates to your transactions. Some of the stuff on the market has more or less a legacy style of automation for this, applying preset rules and configurations. But there are also AI capabilities and analytics built in that can help your team strategize on which areas to investigate, which to look into a little bit further, how to sort of cater your review. Below the sales tax platform at the bottom of the screen is the revenue recognition accounting flow. This might be where, again, some teams are creating manual schedules in Microsoft Excel or manual batch uploads for consumption-based SKUs. And again, depending on your complexity and on the style of company, if you're quite simple, you might be able to rely on a native revenue waterfall in your billing system or GL. If not, and revenue allocation is something you have to be really considerate of, and you have elected to do so at the customer level, it might mean you have to procure a revenue engine to help with that allocation math and entry generation. Otherwise, you may find yourself doing a lot of that accounting in Excel, which generally we try to avoid. I would call out also that I've been focusing a lot so far on kind of a CPQ setup. There is also technology on the market which can read your contract and generate invoice and revenue recognition schedules as well. We'll be talking about this a lot more in detail on later slides, but we'll want to consider the trade-offs of where your manual review lives in that kind of a setup versus in a CPQ setup. And then almost finally, we have existing automations, largely AI powered these days, that can automate cash matching upon collection of the invoice, which is great. A lot of these are native to the GL and can really speed up that part of the close. Um, and also in the collections flow, there are products on the market which leverage AI chatbots and AI analytics to help take a first pass at the collections effort, to help resolve customer disputes, and to also direct the team strategically on which accounts to really focus on and follow up on. So, kind of the high level overview, we'll get into this a lot more in the slides, but generally, we're going to want to think through which of these AI layers make sense, which of the more legacy methods maybe make sense, depending on your company stage, size, and kind of structure. But this is a great way for me to visualize it, and we will be sharing this after the webinar.
Awesome. I think one takeaway for me, at least for that initial component there, is Ben, you mentioned on the market a lot, and there are lots of new tools that are springing up at each point in these changes. So I think we'll be sort of interested as we go throughout this to hear a little bit more about how there's really this whole new ecosystem of potential solutions for each of these juncture points and when that makes sense and how companies should really consider the question of whether or not it's the right call to investigate a new tool. So on that, with that framing, we're going to sort of dive into what does that legacy approach look like for a strong order to cash process? What are some of the pros and cons of continuing down the path of that has been done historically? And then the same on the AI side. Where are there real opportunities that we see Were there risks that teams should be aware of, and how maybe should you think about some of the central questions on whether or not a given AI tool can be a good fit for your order cash process? So with that, Ben, I would love for you to break down some of the key components of what we're calling here as the legacy approach.
Yeah, and so I would say the legacy approach is one that I'm quite familiar with, and it gets to this idea of having a pretty robust bookings policy and applying that policy to more or less a standard order form template, which using a configure price quote CPQ setup, you can generate a quote designed to push that detailed transaction data, think sale price, discount, quantity, SKU, um, onto that form in the preset boxes where you can then route it for signature. The benefit being that the data going into your CRM is the underlying data populating your contract and will be the same data that gets pushed via API downstream to your billing system. And if you have one, to something like a revenue engine, or if you use a GL, which has contract objects in it, to the GL itself. Um, I think a couple things to call out about doing CPQ. It does require a fairly strong bookings policy. I alluded earlier that those automations can break down a little bit if after initial generation of the contract, people go in to the additional terms and add things which might contradict or modify the accounting implied by the quote. So where that is the case and where that's allowed is probably going to mandate a degree of deal review by the revenue accounting team to more or less be scanning for non-standard terms, not so much worried about the tie out between Salesforce data and or CRM data and your contract. Um, so it's a little bit more systematic, a little bit more rigid. Um, but with good structure and team dynamics built around it, it is a very functional way to automate billing and revenue and contracting in a way that's very low exposure as far as errors go. But depending on company life cycle, there's different appetite for that sort of a structure. Um, so the overall objective with some of these legacy setups is to more or less eliminate manual journal entries, more or less reduce or eliminate Excel-based accounting so that the accounting team can really focus on non-standard deals, which kind of break out of the CPQ mold, new product introduction, which would need to be configured in the downstream automations. Think, for example, if you have a revenue engine, making sure that the SKU is arranged correctly, both in your GL and in the supporting systems to have the proper revenue accounting outcome, and then be in more of a monitoring, reviewing position of the system, performing data validations for completeness and accuracy, executing internal controls. The challenges that can be run into are if you have things emerge in your contracts or in your NPI, which kind of break out of the automation logic, you may find yourself in a position where you're once again having to do manual accounting. You may find yourself in a position where if your auditors don't want to let you use AI to read all your contracts, you might be doing a more robust deal review. And you can unfortunately find yourself in a place, at least in short-term stretches, of getting back to a bit of that Excel and MJE based accounting until you've sort of trued up your systems for these new products or these new sales initiatives.
All right, so with the legacy approach, some of the pros, some of the cons laid out, Ben would love to hear you talk a little bit about what does it look like with AI? What are some of the benefits and cons that can come with thinking about newer ways of approaching these processes?
Yeah. So one thing, if you imagine an AI document reading technology, which essentially based on the language on your order form can generate an invoice schedule, can propose revenue accounting. That sort of system is going to be a lot more flexible. And so, as I mentioned, if you have a strange table at the bottom of your contract, which adds detail to an otherwise kind of ambiguous billing term like annual, that kind of thing might get picked up more easily by AI, whereas your CPQ automation might just assume that annual means even over time, isn't really considering or looking for some of these non-standard terms. Um, Even if you don't want to use AI to create the accounting data itself, you can still use AI contract review technologies to try to flag and pick out these non-standard items in an otherwise more legacy automation approach. AI is also great for customer interface, especially if you think about your AR and collections. AI chatbots can take on a lot of the work of responding to initial customer disputes, can help your team really focus on tackling those critical strategic items in your collections process. And then on the back end, once the accounting data is booked or in the process of being booked, AI is great for strategic analysis and insights. Think, for example, like the AI Flux Writer in Numeric. I would mention also, not specifically listed on the slide, but AI transcription technology in a platform like Gong, for example, is extremely helpful for sales teams to glean insights from their customer calls and might even be useful in thinking through how to draft that initial quote based on what you may have agreed to on a call with a customer or with similar customers on prior calls. So AI can help with the accounting itself. It can also be an incredible analytic layer on top of your process to help your people focus on the areas where they are most needed. So I kind of alluded to these AI tools. This is kind of a summary of a lot of the things I mentioned. Again, flagging transactions that have been booked, um, tooling to assist with reviewing your sales calls, creating quotes, um, and interfacing with your customers in your collection software. I don't think we need to go too much more into these, but just a nice summary of what we've covered so far. So, some of the challenges that you might encounter if using AI to actually generate the accounting itself, there is difficulty today in how to audit that technology. When you think of CPQ, that's more of a static application with very defined rules, um, preset forms, preset data flow, established audit practices live around it. So pre-audit, some of those softwares might be really easy to use. Teams will have to consider as they approach an audit, what kind of validation procedures can we create around a solution like that um, to make sure that we clear our compliance requirements. Again, though, with that, there are risks as, since AI might not be a static application, you may not get the same results for the same contract every time over time, depending on what changes, learnings, or configurations occur on the back end. And then I would say too, just from what I've seen so far, things like revenue allocation and modification have some really specific policies and details built around them. And so there is also requirements for some pretty robust underlying data to achieve that level of precise revenue accounting, which may or may not be readily available in some of the existing AI suite.
All right. Well, with those pros and those cons laid out for the AI approach, for our legacy approach, talking a little bit now about what may be the path forward. How should teams think about integrating both, what we're calling sort of a non-binary approach, where it's not a all-in on AI, it's not an all-in on legacy, but it's sort of a thoughtful application of AI places where the risk level is lower and the reward of time savings back is higher. So with that, Ben, maybe a quick recap on how you think about some of the pros and cons of both modes and the way forward with this sort of non-binary approach.
Yeah, I think I would sum it up to say that the sort of legacy automation that I described, which might be leveraging CPQ with integrations, leveraging a revenue engine to perform the allocation math. Uh, these things require a lot of strong upstream policy and also will require a bit of back end review for exceptions to the rules when and as they occur, where AI products are going to be probably a bit faster and more flexible, but there's less certainty about how they're going to execute every single time to the extent that you're generating data or accounting journal entries. And there is also the risk of getting a no answer from your auditors and having to make changes to your system or to your process as you scale into a deeper level of compliance need.
All right. So with that, I think the takeaway, Ben, in our conversations leading up to this is you don't need to pick one or the other, but rather instead think about where AI can be integrated So maybe talk a little bit in more concrete terms, what that looks like for teams of different sizes.
Yeah, I think one way to think about it, and this is just one example, this is not the only way to do it. People can have different opinions or takes on this structure. But one example would be, at the front end, leveraging AI to help draft your policy, leveraging AI to help draft your quotes when you're going through your customer call and transcripts, but ultimately perhaps still using a CPQ arrangement to generate your contract, generate your quote and subscription, and generate the SKU level data in your CRM. Um, as you go through the accounting flow, you can have AI scaled in both on the customer facing side, say of billings and collections, as I mentioned earlier, um, but also on some of the accounting, like proposing cash matching as your cash comes in, maybe with a human level of review and approval on top of that. Um, on the back end, after journal entries have been posted, AI also can be really strong in your flux analysis to help catch exceptions and errors in the accounting that has already occurred. And similarly, the AI layer might also be useful, again, if you're using a CPQ setup for document review to find and action non-standard terms in your contracts, with the general idea of limiting the manual touch to where it's most critical, most needed, but also doing so in a way that will meet your audit needs in the future.
Wonderful. And one question there, Ben, that I know something we had talked about is some of this depends on the level of scrutiny involved in your audit, whether or not you're a really small company that's pre-audit and what might make sense in that situation can be different for a company that is public and is under really high levels of scrutiny. So would love for you to maybe briefly touch on like looking at an order to cash process through the lens of like what is the level of audit rigor and how that might like change a team's appetite. Any recommendations of how to think through this set of questions contingent on team size?
I mean, I think you've obviously got way more flexibility as a younger kind of pre-audit company. But what I would call out is there are ways to still in your automation of your process set yourself up for success when you do reach that stage of audit. Um, and so I think just having that forward-looking understanding of the cost trade-off where maybe you do save a little bit of money on software upfront by adopting a simpler approach. But by the time you hit scale and volume, just understanding that it may escalate your hiring requirements and may bring you into a massive data migration project, which on the back end is quite costly. It's just a useful way to frame it and really stop and think and understand what is the cost that I'm averting today, but what is the potential cost that I'm going to take on with a really difficult migration. I am a big fan of buying software today that will also suit your needs tomorrow because these sorts of implementations can be really challenging. They can be risky to your financials and they can put a lot of strain on accounting teams. So not to say that every company has to do things the same way, but just being thoughtful about that transformation earlier can save a lot of pain later on.
All right. Well, using that as a segue, I know some of the things that we've touched on is how it is not just about viewing order to cash in isolation, but viewing it as a part of a broader set of questions around tech stack, orchestration, around how you want to handle questions around completeness and accuracy. Ben, do you want to touch on a couple of ways in which folks that you work with in your role use Numeric to help with a couple of aspects of the order to cash process?
Yeah. So what's on the screen right now, I'm actually going to talk about two things, but the first I'll mention is what's shown in the image there, which is our monitors. In Numeric, we have the ability to sync full transaction data into the product itself, and companies can set up monitors to flag when transactions break certain rules. For example, you might have a capitalization threshold for purchases over a certain dollar value. And so if you have, say, furniture expenses coming in over that value, which were not capitalized, those would flag in the monitors. And so this is a form of automation in the kind of review space where once you've set those upstream rules, this can be helpful in picking up exceptions and targeting the team's review to the things that fall out of sync. I'll also just quickly mention that the checklist functionality is a way to take, once you've determined your process, where the automation levels live. To the extent that there remain manual tasks, SOX procedures, review procedures to ensure the functionality of your system, managing, tracking those tasks can live in the checklist. And there are also automations built in for notification on review notes, email reminders on when things are coming due. So just a useful way to continue tracking those things that were maybe not able to be fully automated or manual things that need to be done to support your automation. And then with respect to reporting, within the Numeric product, you have the ability to configure custom reports. Using revenue as an example, you can run revenue reports by customer, by department, by entity, region. You can disaggregate based on the data that lives on your journal lines. And in my experience, the flux analysis is a great way to catch exceptions that maybe occurred in an otherwise automated process. And again, this is an example of the AI layer where at the click of a button, Numeric can read through your transactions and explain the causes of the variance as well as the trend line, which can help the reviewer focus in on areas that maybe broke in the automation or edge cases which were not handled correctly. So again, like this is not generating the accounting itself, but it's a strategic layer on top of it to ensure accuracy and validity. And then pointing out to the real-time reconciliation, again, this is just another image of what that flux analysis looks like. But I think we've more or less covered already the underlying functionality. Um, Lastly, again, on the back end, when the accounting is complete, using a reconciliation module to tie out to your underlying support is critical. And also, again, the automation feature there being where transactions come in late that kick a reconciled balance out of balance, it will automatically reset and let people know. And again, target that review to what is this entry? Why did it come in? Why is it creating issues on our reconciliation? And you can see also in the image a link to the subledger icon. Just a quick shout out to that as well. And actually, I'll pause on that. I believe we're going to get there on another slide. Earlier on the call, though, just to pivot quickly, I did call out using AI at the front end to help develop your technical accounting revenue rules. Within the Numeric product, there is an AI assistant which has three modules, one for technical accounting, one for accounting policies, another for tax. You can use this to really help first draft your 606 memo, to also draft a bookings policy underlying your revenue accounting, and of course, also to address potential tax concerns, for example, policies and procedures around sales tax.
Awesome. So Ben touched on lots of ways that Numeric can be woven in. Obviously, we're not the only way that folks can help with the order to cash process and don't actually handle some of the core workflows we talked about today. I saw a question in the chat earlier around how people maybe should think about specific items in their tech stack, specific tools or players in the market to help with that. Any other recommended tools to check out in the order to cash space that maybe touch on some of the AI approach that we've talked about?
Yeah, there are some really interesting ones out there. Tabs is an example of a company that's got a lot of the document reading technology and capability. Another document reading technology which has been around for a bit longer would be something like DocuSign CLM or Ironclad. These have the ability to kind of read through contracts and identify terms based on your configuration and what you're looking for. Um, for example, on the cash collection side of things, High Radius has a lot of AI features built into it on the chatbot side and on the customer issue resolution. A lot of the GLs out there today, Xero is one example, NetSuite, Workday are others, have a lot of that automated cash matching that I was talking about, which I think is really useful. But there are also products I've encountered like Sequence, which has more of the CPQ approach to building out your contract data, billings, and revenue recognition, which I find also quite interesting. So, these are a few examples. I think I mentioned sales tax too. I've had experience with Anrock and Avalara. Both of those can integrate with billing systems to help apply your sales tax automatically. So these are just a few that I've encountered that I think are really compelling and interesting, um, but lots of others out there too.
Awesome. Yeah, and I will say if folks have other tools that they've used at any point in this at any point in the order to cash process, feel free to also drop those in the chat. I think many different players jumping up in this space, which I think is really interesting to watch, to consider. And maybe to round us out, Ben, would love to hear about how you think about what makes sense now for a company's trajectory, how to think about the long-term approach. You briefly touched on this earlier. We were walking through how to think about what is the right fit based on your company size, but maybe as a parting note, the short-term versus long-term trade-off.
Yeah, I think to the extent that companies leverage AI to generate accounting early, there may not be the same control rigor in the environment that's going to contemplate how to get this over the line once we get to auditability. And so, not to say that it can't be done, but rather it's challenging once you get to that point to have to kind of scramble and figure out, okay, well, we've been relying on this AI-driven automation to create our accounting for quite some time. How do we prove it out? So I'm a big fan of being thoughtful around procedures, which kind of help there. And so, for example, you might still want to keep SKU level detailed bookings data in your CRM when you're close winning opportunities so that you can really compare real time to the output of an AI tool that's creating invoicing and rev rec for example, right? So you can still build in some of that completeness and accuracy work, but it's just, something that has to be a little bit thought out, and it can be costly to try to scramble and implement it later. And so, whichever approach people go with, just kind of having that thought in the back of your mind as to what it will take to grow with this process um, into the next chapter, I think is really helpful.
Perfect. All right. Well, to round us out, gonna go back to that flow chart that we briefly touched on at the start. Now, with the lens of all of what we've talked about, with the legacy components, with thinking about the AI approach when it makes sense, when it doesn't. Ben, do you maybe want to revisit this through the using the conversation as sort of a starting off point for how folks should think about architecting this process?
Yeah, I think we've more or less covered a lot of this. I think when we share the deck um, and share this flow chart. The gear and numeric icons are examples that I've run into of where really effective automation can occur. Like in the updated version of this flow chart, let's say if you implement some of these gears, that blue square at the center bottom for the manual creation of the billing schedule just goes away. And you have a straight line to the billing system from your CPQ, right? As one example. And you may even have a second line from that CPQ going to, instead of that blue square for creating the revenue schedule, it could be going to a revenue engine. It could be going to a GL that is capable of receiving contract objects and has that waterfall functionality. Or maybe you're relying on the billing system payment processor. Maybe it has a native revenue waterfall or recognition capability in it. Same outcome if you're using AI to read contracts and create accounting. Again, the arrow to the billing system might actually go away entirely if it's native to that platform. And you may have a straight shot from that system into the accounting software itself. And so when we talk about, cost comparison, um, some of those products might cut some things out of the loop as well. And so this, as it exists now, has elements of both. It shows the manual steps, it shows the potential automations. Of course, like anything, not exhaustive, not perfectly applicable to every single company that's ever existed, but I think overall a good framework for how to think about it and what we've talked about today.
Awesome. Well, with that, we will stop our screen share of our flow chart, our slides, and open it up to any questions that folks have in the chat. If not, I have a whole slate of them ready for Ben, but anything that we didn't cover, didn't talk about during our time here that would be helpful for anyone on. as we're waiting for questions to pop in, Ben, I would be curious to hear a little bit more about when companies are deciding whether or not they want to bring on a new tool in their tech stack, how they avoid not purchasing a huge set of tooling and then run into implementation hurdles along the way and sort of end up in tech stack bloat. So any sort of comments that you have on how to think about thoughtfully integrating and like implementing, but a lot of these tools do take a fair amount of work to actually get
Yeah.
up and running.
A learning experience for me was when kind of going through the procurement flow, looking at different products, like really jumping ahead and getting a clear list of what integrations are supported, right? So, if you have already determined what your GL is going to be, you've already determined what your CRM is going to be, you already have an existing sales tax platform. Those are kind of inherent constraints, right? To the extent that you're not planning on changing those anytime soon. And so you're going to want to have a CPQ product that can two-way sync between your CRM, the billing system, and any revenue system downstream. It's tricky if that doesn't exist, right? Because you might not have parity between your bookings data and your billings and revenue data, and it can make it hard to validate down the line or to provide, clear reports from set systems to your auditors. You might be mixing and matching a little bit. So really nailing down where the integrations live, but then also considering what features which need to be covered by an integration today may already be covered natively in a combined solution. Um, and maybe there's cost savings that exist there. But generally, to the extent that that's not true, just really getting ahead of the integration conversation and making sure that it's aligned with your existing suite of finance products is critical. I would say also just building out a plan to test is really important. So defining your business scenarios, defining your accounting outcomes, and testing to those within the product to the extent that you can in a demo prior to adopting is also a best practice that I really recommend, because you don't want to find yourself halfway through a live implementation or a go live and realize that you're not able to handle certain business scenarios.
Awesome. Another one that I know has come up often is order to cash involves working with many different parties at an organization. You specifically talked about a bookings policy, potentially working with folks on the RevOps side for the sales team, sales leaders. Most of our focus was on like the actual process, the tech, the tools in place. What can you sort of speak to around the people involvement and the stakeholder management that is also really critical to being able to have these processes moving efficiently?
Yeah, I think, change management can be really challenging. And so if you do build out an automation that is contemplating a fixed list of SKUs, being in touch with sales, being in touch with product, being in touch with deal desk to pick up on an action early, emerging new products at the company, is critical. Because again, otherwise, if those things go live before you've configured your system to handle them, you're going to be back in Microsoft Excel accounting until for the period of time between go live and when you've updated your system. So keeping that regular cadence and maybe as a part of your policy, having a bit of an accounting sign off in the BRD for new products or for new SKUs,
Mm.
so that you have a defined process around introducing these things into the ecosystem is great. And of course, sometimes things are so strategic and critical, we can't wait for accounting and finance to set up their systems. That's okay. But at least having that conversation and that touch point um, is really important. And similarly, for pretty much any of these policies, bookings policy, for example, that can be a function of not only conversation with sales, it might be a conversation with deal desk, it might be a conversation with legal. What are we allowed to promise by region, by country? Um, and so it's not just meant to be a way for accounting to achieve their desired outcome. It is also a critical conversation to keep the company compliant and to make sure our strategic initiatives and objectives are aligned with our broader operational needs and requirements.
and
Awesome.
I'm going to jump in here. We have a question from Cody. So I'm going to read it out, Ben, so you can answer it. We have says we invoice large enterprises for six-digit amounts. It's hard to automate dunning and collecting because the large enterprise clients have procurement groups that seem to function more like black holes than procurement departments. Takes forever and numerous people to get a purchase order. Invoices end up in numerous systems like Coupa. Any advice on how to automate or be more effective with converting orders to cash with these large orgs?
Yeah, it sounds like, and maybe I'm misunderstanding a little bit, but there's a bit of an issue of PO numbers not making it onto invoices, getting into billing disputes with these large enterprises. Um, and so I might mention that some of the document reading technology can be really useful to pick up on those sort of discrepancies around missing PO numbers. Um, and similarly to it, you might want to configure that requirement in your CPQ data, PO required, yes or no, so that you can have a bit of more of a live review of the downstream billing setup where you can configure in that software maybe that as a required field on your invoices. And so both using a bit of the AI automation to review your existing transactions and see where that data is missing, but also um, as a requirement upstream in your bookings as well. But I know that's a common problem. So appreciate the question, and I'm sure it'll continue to be an evolution in your process.
All right. Well, with that, we'll give folks a bit of time back in their day. We're ending roughly 3 minutes early, so maybe you have a chance to go get a water or a snack. And want to take a moment to thank Ben for jumping on, for talking us through the legacy approach, the AI approach, some of the ways that we should think about the central question of how to change our current process to fit sort of the shifting climate. In terms of follow-up from this, we will be sending out an email that includes that flow chart that we went through, if that is a helpful takeaway to be able to leverage as you think about your own process, some resources from our team, as well as the recording of the webinar. So if anyone wasn't here on your team that you think would benefit from watching components of this, all of that will be sent over via email. And finally, if you have any feedback on anything covered in this webinar, things that we didn't get to, future webinar topics, our team is always excited to run with any of that and appreciates a lot of the back and forth conversation. So thank you to all. And yeah, hope everyone has a wonderful rest of your day.
You
Thanks, folks.
take care.
See ya.